please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
No bank has lost a single rupee with JSPL, and no bank will lose a single rupee with JSPL. And today all our accounts are absolutely standard and performing.
The opening level 10,599,600 and 125 up on the Sensex, so that's 34,218.
Whether we take the view globally or within the country, I would say that this is one of the markets that we'd put as one of our top picks. Absolutely.
It is going to start on the 12th of Feb, which is a Monday, and it's going to end on the 23rd of Feb, which is a Friday. So it's going to be a 2-week inspection.
20 odd points, actually 20-25 points off the high, but it's still a pretty good looking screen, starting the week with about a 40-45 odd point gain.
58 points higher, that's what we've got going on Nifty. Midcaps have done much better once again today. There's a lot of different sectors in action that you can track.
Bulls continue to shatter records on Dalal Street. Nifty conquers 10,600. Sensex rallies 200 points. This is the 41st time markets are closing at record highs in the last 1 year.
Sun Pharma rallies after a CNBC TV18 exclusive that the US regulator may inspect the Halol plant once again. The plant cannot export to the US currently. Unichem rallies after strong third quarter earnings. Wockhardt, Lupin also rise in trade.
Steel stocks rally after China bans any new capacity addition in 2018. Jindal Steel and Power's Naveen Jindal tells CNBC TV18 his company's debt is sustainable and a 1,000 crore fundraising plan through a QIP is in the works.
Incumbent telecom companies under pressure in trade. Airtel and Idea tumble after Reliance Jio announced tariff cuts over the weekend.
And finally, financial stocks saw a steady session after the 10-year bond yield finally stabilized after a roller coaster jump all through last week. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you about 8 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. As always, we're going to do that, wrap out the day of trade in just a bit. Our experts are going to be with us over the next 30 minutes and basically they will answer all your stock-related questions. Joining us today are Deepan Mehta, who's member of the BSE and NSE, and our own technical expert Ashwini Gujral. Gentlemen, thanks very much, both of you, for being with us here on the show. But before we come to you with the questions, let's just wrap out the day and how it was. Needless to say, another strong day.
Oh yes, it's sounding like a broken record, and that's perhaps why we should be cautious. But it was a huge party out there on Wall Street, despite the fact that the jobs numbers disappointed. Asia was in the green, not in as much of a party mode, but still in the green. And Europe, again, stocks are trading at about 2-year highs. So, even in India, despite a tepid forecast for the GDP numbers for the current year, the markets just joined in with the global party. You can't stay out of step, and as if to abet it, you had other reasons. The new 10-year bond kind of ended the bear run that you saw in bonds, at least for the moment. No one is swearing that it's over. Everyone expects the yields to climb back, but for the moment at least, people have started buying bonds at lower prices, and you could see that impact on financial stocks. More importantly, just to end where I began, FIIs have bought over 1,700 crores year to date. That is in the first 5 trading days. So they were out of the Indian markets in 2017 calendar. So calendar 2018, the risk on has brought them to Indian markets as well. But I guess you'll have a very long list of stocks.
So I'm going to keep it short for that very reason. So I mean, let me begin with where there was, action on the higher side. So Coal India, Larsen, Bosch, these were among Nifty stocks, the top gainers. And then, you could neatly put 3 stocks each in 2 buckets, IT and Pharma, which kind of sort of did very well. So you had Infosys, Tech Mahindra, TCS, decent gains. Look at Infi, 2.5 higher. You look at Lupin, Sun Pharma and Aurobindo in the pharmaceutical packs. Again, decent gains. 2.5, 2.25 on Lupin and Sun respectively. Aurobindo higher as well. And then you come to the broader market. Stocks like IDFC Bank, Capital first, ICICI Pru. Then you come to, the carbon black story, which just plays on and on. You had Philip Carbon, Rain Industries, Graphite, all basically pretty much near their daily circuit levels. JSPL, the management was on the channel. We'll talk about that in greater detail in a bit. Walkhard, Mindtree, these are some of the top gainers in the F&O space as well. Losers, Telecom, Idea and Bharti. Idea was down 6, Bharti was down about 4.5, both pretty much near the day's lowest levels. And of course, we know the reason. ONGC was also down about 0.5% or so.
Fair point. Well, you began by saying some of the smokestack stocks, economy facing like Coal India and Bosch and L&T did well as the defensives. Yeah. But one category did not do well, and those were the banks. Yes. The bond market relief only helped some of the NBFCs.
Actually, the PSU Bank Index was the only index today which ended lower. Everything else was up.
Okay. So. Well, Ashwini, on that note to you, how big is the fact that the Bank Nifty is still not participating, and therefore what's the next game on both the indices, Nifty and Nifty Bank?
See, the point is that large caps you can't say are in a great bull market. They may be hitting new highs, but the buoyancy, the big stock movement, that is not there. It's basically a mid-cap rally, which is a cost of capital rally, and that there is a solid bull market only in mid cap and small cap. If large stocks like HDFC Bank fall on the first day of a fresh breakout, there's very little to be said. Reliance has now started moving sideways. So the laggards, Infosys and Pharma stocks are kind of taking the market higher, but financials must lead. Otherwise, all rallies, they tend to end prematurely. Now, having said that, I think mid-caps, Nifty, next Nifty, which I do track, that's hitting fresh highs. So there's clear action on that side. But maybe we can, probably limp along another 200 points. I wouldn't be surprised. But it's not a very convincing kind of expansion, one that will, last many days.
Deepan, come in on this. Is it a dangerous game, playing on the edge, as it were, when mid-caps rally, but the big boys don't quite tag along?
See, I think, mid-caps are rallying because of the kind of, investors which are coming to the market through the mutual funds, and mutual fund managers themselves are trying to get the alpha as far as the returns are concerned, and then there are the portfolio managers who are also tanking up on. Really, we are seeing a lot of frenzy in mid-cap stocks, and these investors are the ones who are really chasing growth. So they don't mind paying a higher PE multiple if they are assured of 15-20% type of visible growth over the next 2-3 years or so. And that particular theory has worked well over the past, I think, 3-4 years, especially in this bull market, where you pay higher for growth and you get rewarded. So that kind of situation is prevailing even as of now. And the thing with large cap stocks is that although they may appear to be cheap in terms of valuation wise, there's either problem with visibility of growth, as we have seen with IT and pharma, or there are cyclical earnings situation over there, as the case with metals and some of the capital goods manufacturers. So there is some problem or the other, and you don't get large cap secular growth stories, with the exception of, say, perhaps Maruti or Eicher Motors, HDFC Bank, HDFC for that matter, and IndusInd, which is why we are seeing the concentration of buying taking place in the mid caps. But I think even that has gone on for a bit too long, and the valuations there certainly are extended to levels which you have not seen in recent times. So maybe you could see a complete turnaround in this scenario over the next few months or so in 2018.
All right, that's the broader market setup and how to approach things. The second headline of the day, it was a good day for pharmaceutical stocks. In specific, Sun Pharma was one of the top gainers, large cap pharma stocks which gained. This is on the back of news that the US FDA essentially is going to re-inspect Sun's critical Halol plant in February. Sun Pharma currently cannot export to the US from this plant. This also essentially propelled other pharmaceutical stocks like Walkhard, Lupin, Unichem, etc. higher. Let's quickly get the news first. Ekta is here with exactly that. Ekta.
Well, yes, I am picking up from my sources that the Sun Pharmaceuticals Halol facilities re-inspection by the US FDA is going to begin on, is likely to begin on the 12th of Feb and continue up to the 23rd of Feb. So that would be a whole 2-week re-inspection of the Halol plant. Now, remember that this re-inspection comes after the warning letter that was issued in 2015 and after the plant was then re-inspected by the US FDA in November-December 2016 and was issued 9 observations. After that, the company did complete its remediation by around Q1 to Q2 of FY18 and hence had asked for a re-inspection by the US FDA. This plant is particularly important for Sun Pharmaceuticals, though its relevance in terms of the number of products filed from it pre the warning letter has reduced simply because of the risk mitigation strategies of transferring products, plus a lot of the products have now become redundant in nature, but nonetheless it is still around 20% of US sales and is expected to be a big sentiment boost if in case the plant is cleared without any sort of glitches. So this will be one particular inspection that the street will be watching very closely.
Okay, thank you very much for that, Ekta. Actually, the street is already watching because we have a question coming in on Sun Pharma. This has been tweeted to us by one Mr. M.G. Kapoor. He says he has bought 100 Sun Pharma shares at, is that right, 2850 rupees. He would like advice for the long term. Was there a capital, event? Is this right? 2850 is the price at which he bought, and he wants to know what is the advice for the long term. Deepan, correct me, I remember the stock only from 1,000 rupees.
Yeah, there have been some splits and bonuses, which is why I think the cost is at these levels. But okay. Assuming that the investor is still in profit, I would still advise him to exit out of Sun Pharma. And the reason for that is that, even after the Halol plant, supposing were to get the permission and start exporting, the basic problem and the structural changes taking place in the industry, that being pricing pressure in US and elsewhere, that is not going to change. And maybe from a low base, you may have Sun Pharma coming out with good set of numbers from its 2-3 quarters or so. But the overall growth momentum is lost for Sun Pharma and the rest of the pharma industry. So my sense is that, although valuation-wise there is comfort, in terms of growth, in terms of visibility of earnings, that is not there in pharma at this point of time. So it's best to exit out of such rallies.
Okay. Thank you, Deepan. Ashwini, if I know your previous answers right, you would broadly agree?
See, he's been through a massive bear market. If he had to sell, I think the time to sell is gone. I mean, now he probably should wait for a nice pullback rally, maybe even to 700, 750, and probably exit there, because living through a bear market which went from 1200 to 400, and now you exit at 500, that doesn't make a whole lot of sense. If you lived through this, you are a long-term investor, hold on, there will be some better times, if not all-time high, maybe midway, something like 750, 800. Those will be good levels to get out.
Okay, we have another one. This is Lupin. This is only slightly better. Twitter user Rahul has 500 shares of Lupin, which he purchased at 1,300 rupees a share. He would like some advice, again, from a long-term perspective. So this is, the stock Lupin, it was about 921 today. He's bought this at 1,300 rupees. Ashwini, to you, same advice?
See, buying something at very high prices and then becoming long-term investors often does not help. So either he averages down strongly, and then if the stock gets back to its 200-day moving average, which is like 1,060, 1,070, he gets into the money. Or just holding on and hoping 1,300 will come at some point. I don't think that's a very smart way of investing. You can't be 500 points lower. You should have had a stop, some 10% stop or something where you could have gotten out. Once you lose 40% of your money, it's almost impossible to get back to break even.
Yes, I think all these are probably 2015 buys, maybe a little bit of 2016 and Lupin. But after that, difficult to make money. let me get to the third headline of the day. It wasn't just pharma, but it was a decent day for some steel stocks as well. They rallied in trade after news came in that China has banned any new capacity addition in 2018. Separately, Prakash Industries was up after that company posted a healthy set of numbers. Also, JSPL was up as Naveen Jindal told CNBC TV18 that his company's debt has become sustainable and that a 1,000 crore fundraising plan through QIPs is coming soon. Let's listen to Naveen Jindal and then we have our Q&As lined up.
We are going to be raising only about 1,000 crores.
Okay.
And we are going to be utilizing it mostly for some debt repayment.
Okay.
And just completion projects we have completed, but some we need to pay to our suppliers and stuff. Some a lot of creditors are there, so just to clear all those payments. A small portion, maybe around 1,000 to 1,500 crores of priority debt.
Okay.
Again, for long-term working capital requirements and for the capex that we have incurred. So for which we need some loans.
Okay.
So for that only. But with this also, our total debt is not going to increase.
Okay.
Because by the time we take this much loan, we would have also repaid about the same amount. So in fact, our loan is not going to go up.
All right, we have a question. A Twitter user Bishal bought 700 shares of JSPL at about 243 rupees. He would like to know if it's a good time to buy more. And his sort of time horizon is near term. So let me put this your way. Ashwini, what would you tell him, JSPL?
Well, he hasn't done the smartest thing. This stock has gone vertically from 165 to 270 and he's bought at the higher end of the range. Any sort of correction will get him back towards 200. So if he wants to add, he needs to add on a sharp correction. The 20-day moving average is 195. So 200, 210 is possible anytime. That's when you add, because if you keep getting stuck at higher levels, very quickly you'll find that you are 25% lower.
Okay. Well, here's another gentleman who has shares in SAIL. So let's check if that's a longer term view. Anirudh has tweeted to us that he has shares of SAIL which he bought at 76 rupees a piece. He would like to know how it may fare in the short and the medium term. Deepan, there is a short and a medium term. Should he stay put at 76 rupees? He is what, 30% in the money?
Yeah, I think there can be a further trading bounce in all steel stocks and Steel Authority included, and I think base effect will come into play. So next 2-3 quarters, SAIL may report very good numbers, and that may keep a lot of trader interest alive in the stock. And with PSUs, there's always the hope of some disinvestment or partial offloading, which tends to ignite the stock when such news flow does take place. And Steel Authority does have the benefit of backward linkages far better than any of the other steel companies. So in that respect, I think it benefits maximum from any increases in steel prices, although it has other disadvantages like higher labor cost and higher administrative costs. But I think that after a long bear market in Steel Authority, it is in for a cyclical upswing, and the investor could certainly ride this upswing. You could hold on to the stock for another 15-20% type of a gain from these levels as well in the short to medium term.
All right, time for a very quick break, gentlemen. Stay with us. Our experts will continue to answer all your stock questions. We are back with Markets Today Talk Back. Welcome back. You're with us here on Markets Today Talk Back. Let's go straight to headline number 4. Telecom incumbent stocks were under pressure. Idea Bharti, some of the top losers today, as Reliance Jio got a new plan in place. Both stocks tumbled after Jio announced tariff cuts over the weekend. The fear, of course, is that this would force Bharti and Idea to match Jio in terms of the new tariff. The new plan, by the way, is 149 rupees, 28 days, 1 GB per day. This is far lower than what the standard big plans are.
You save 50 rupees, you get 50 rupees less, or you can use I think 1 GB
more data.
More data. Well, there's a tweet on that stock, which is Idea. Coming to us from Sridhar, he wants to know if he can hold the 2,000 shares of Idea that he bought at 81.60. Deepan, should he?
No, I think you should sell Idea at this point and all other telecom stocks as well. They've rallied significantly, post Jio announcing its various plans, and there was hope that the consolidation would bring about some sort of discipline in pricing. But the way the industry structure is, the only way to attract or retain your customers is by offering cheaper and cheaper tariff, and that's never really a great business model. So we have a negative view on the entire telecom space, and I think any such rally should be used to exit out of telecom companies. They will find it very difficult to get a decent return on their investment, and again, these are businesses which require considerable amount of capital expenditure to maintain the networks, to upgrade the networks. So I don't think it's a great business to be invested in from a investor's viewpoint. So I would say take this opportunity. Idea, Bharti have all rallied recently. Take this opportunity and exit out of these stocks.
Okay, and on to the fifth and the last headline of the day. Financial stocks saw a steady session after the 10-year bond yield finally stabilized after a roller coaster ride over the last many sessions.
Okay. Well, to be fair, this is a half-hearted headline because bond prices didn't actually rise today. They rose on Friday. Today they were more or less flat. If anything, they lost about 5 pice or thereabouts. And it's only the NBFC stocks that have risen, and that was some of them. The bank stocks have not responded, so this is not really quite a financials rally as much as an NBFC stock surge or recovery. But we have an NBFC question, therefore. Twitter user Vivek has 1,000 shares of, I think, ICICI Pru at 380 rupees a share. He wants to know what's the outlook in a month. Okay, short term. Ashwini?
See, it's not the best, short-term stock because it's just about bottoming out. So he has it at a good price. Now, if this rally continues and it crosses 200 DMA where it's close to a 411, then maybe, he should expect targets closer to about 450. It's gone through a bear market, so it's well positioned for that sort of a rally. But again, 380 is your stop. If it starts to again fall below it, then he needs to exit.
All right, gentlemen, we're out of time, but thank you very much, Ashwini and Deepan, for joining us and taking on all our viewer queries. That's it on this edition of Markets Today Talk Back. Thanks for watching.